Hello everyone and welcome to today's more report on Tuesday the 31st of May with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly interesting start to the day because we've had these comments from Janet Yellen on Friday that basically confirmed that the Fed was sort of moving towards a rate hike in the summer. Exactly when it's going to happen, it's sort of unsure. Certainly Yellen's comments were not entirely sort of focused on exactly when it's going to happen, but she said a rate hike would be appropriate in the coming months if the data supported. And that pretty much backs up what the market had been thinking. There was a slight dollar strengthening on the back of that, and we saw the dollar strongly higher on Friday evening. Slightly consolidated since then because we had Memorial Day yesterday for the States, so not a true day's trading for the US yesterday, but we're back in today, and again the dollar is marginally stronger, and we've seen yields pushing higher on both the 2-year and the 10-year, and it's looking fairly strong for the dollar, and that's obviously impacting through forex markets generally. You're seeing the gold price impacted by that as well. But interestingly enough, we're still seeing the oil price holding up, and that is generally a positive for markets. That is certainly a positive for the sentiment, and we're still seeing that playing out. Now the interesting move again has come through cable today. Let me just quickly show you actually. We've seen a big turnaround, sort of moved towards the resistance, but then subsequently sold off on the back of a poll that suggested that perhaps the Brexit vote was going to be closer than perhaps previously thought. So subsequently cable gets sold off, or sterling certainly gets sold off, and cable continues to sort of move around on this whole Brexit news flow. So it's very interesting moves that we've seen on that today. But pretty much what we're looking out for is we've got a fairly large amount of data actually today. We've got the Eurozone flash CPI at 10 o'clock. Now this is the flash CPI from last month, which was 0.2%, and the expectation is for an improvement, slight improvement to minus 0.1% this month on the flash CPI. And then we've got sorry, this is the core data actually, and that's core data is expected to improve slightly to plus 0.8. Now this was the flash data, which was subsequently revised lower to plus 0.7, so that's expected to come back to plus 0.8. And then into the afternoon, again inflation based really, we're looking at the PCE, the core personal consumption expenditure, which is the Fed's preferred inflation data, and that's expected to come in around about similar to last month actually, plus 0.2 on the month, which would be around about 1.6 on the year-on-year data, so pretty much in line with what we'd seen last month. And then looking at the Case-Shiller house price index, it's expected to actually dip back to 5.2%, so that would be not all that positive. But considering the housing data we've had in the last month, whereby you saw strong new home sales, strong pending, and it's yeah, I mean, to say that the house price is set to fall on the back of that, I find that a little bit surprising, but maybe I'm not looking at it in the right way. But still, 5.2% is the expectation there on the Case-Shiller house price index. And at 3 o'clock, we've got the consumer confidence, the Conference Board consumer confidence data, which is expected to come in at 96.0, so up from 94.2 last month. So a lot to actually impact on markets this afternoon, and certainly that inflation data for both the Eurozone and US is going to be important. But my chart of the day, which I'll show you, that is the Kiwi dollar. So let me just get the Kiwi dollar back, and we've seen this uptrend as the dollar was sort of correcting, and that's rolled over now. We've seen this double top pattern that gives us an implied target of around 65.50, and we've seen this sort of pull back to the neckline paid with that rally with the resistance overhead, and since then we've seen a couple of weeks worth of lower highs and lower lows, closing below the old support which had been in place, or just above 67 really, but closing below 67, And we've seen a rally back to that downtrend today and then failing around that level and then turning lower again. So it would suggest that not only that, with the momentum indicators more negatively configured, look at the RSI, which is sort of consistently moving sort of below 40 now. MACD lines below neutral, stochastics also negatively configured. It's all pretty much suggesting that rallies are a chance to sell, and that intraday rally that we saw today, sorry, that's not the Kiwi, that, when it comes up, will be the Kiwi. Insufficient data, that's annoying, isn't it? So let me just try and reload that. There you go. Lower highs, lower lows. We've seen this rally back to this downtrend, sort of coming in today, unwound the momentum indicators. Look at the amount of times that the MACD lines roll over and turn lower, and gives you a chance to sell. You've had a stochastic sell signal. You've seen the acceleration of the move lower in the last few hours. It seems as though that's giving you the resistance around 67.35, and again that is sort of continuing this downtrend. And it's pretty much fair, I think, to say that rallies are a chance to sell on this Kiwi. I think you're going to get a retest, likely retest of that reaction low, at 66.75, but subsequently continuing the move lower. 66.70 is a line of support, if my crosshair works. 66.70, 66.60, 66.70 on this one. Seems to be a line of support, these three lows here from late March, but subsequently if we lose that level, then you're sort of back towards this 65.60 level, which was the big support February, March, and that would also coincide with the downside target of that top pattern. So I think that that's what we're seeing. We're seeing this sort of continued downside, lower highs, lower lows, and selling into strength on the Kiwi. So I wish you good luck in your trading today, and I will speak to you again later. Thank you.